removing the middleman. So the middleman, all these big wirehouses that have been making money hand over fist, uh, and quite frankly, even through the the pandemic, they've made money hand over fist because they've been given all this money to loan out that they're not loaning out, and they're keeping that money for the day rates and making tons of money off of this money that's supposed to be going to the average person and not. Um, they're trying to figure out ways to make money, and they haven't figured out a good way to do that in the tokenized space yet.
Okay, Joey, welcome to the podcast. How you doing?
I'm good, thank you.
So you're filling in for your co-founder Gary, who came in today. It's really interesting that you're dialing in here from Texas and he's from the UK. I love this. You're pretty much an internationally run, decentralized startup. I feel like there's a lot of nuance we can learn about how you guys met, how you guys operate. Because me and my co-founder, we live like a couple of blocks away. And during the pandemic, it's been difficult because we got so used to working together, right, in person. And we had to shift our mentality and work in like a virtual way. And even then, like if you wanted to, we can always pop over and like physically see each other, right, if you really wanted to. But with you guys, I think there's a great story there. So first of all, I'd love to get an intro about your project and what you're working on. So can you give us an intro?
Sure. So CurveBlock is working to democratize access to green real estate development as an asset class. Um, my background is as a registered investment advisor here in the U.S. I owned an investment advisory firm for a lot of years, and I sold that firm a number of years ago and started doing more general consulting. I got interested in the blockchain space when consulting with a client and looking at the blockchain more from a security perspective to secure data. And then started looking at the token side and understanding from a registered investment advisory background that there was no way regulatory wise that was going to fly. There was just too many problems. But I also saw the potential that was a needed thing in the financial markets. We need to innovate in the markets. The markets have been dominated and controlled by the big wirehouses for years, and that keeps the little guy, the average guys like us, from being able to participate at any real significant level. So I started talking about security tokens and the need for security tokens and working within the regulatory framework in a tokenized space. And that's how Gary and I met back in the beginning of 2018. And through LinkedIn, through some of the things that I was writing, talking about regulations and the need for regulations. That's not a real popular topic within the crypto space. And I don't necessarily say that we're in the crypto space. We're tokenizing assets. What a lot of people don't realize is that the securities are already digital. When you buy a share of Coca-Cola or Adidas or whatever it may be, you're getting a digital representation of that share. And there's only one company in the world that digitizes those shares, which most people don't realize. So what tokenizing the share ourselves does is it takes the middleman out, and it allows for a retail investor, average folks, to be able to participate. And so that's what we're doing, is creating a closed fund that we're selling digital shares of to allow regular people to invest and be able to participate in real estate development, which has been an asset class that has been exclusive of retail investors forever. It's the number one place that wealth generation has been created is through real estate development, and the number one place that people have been excluded from participating in.
Gotcha. So I've been following like this token industry for quite a bit, right? Like especially when it comes to the real estate. And with construction, like there's a construction itself, like as Mark Anderson said, software eats the world. When the construction space alone, it's like almost a $1 trillion market where there's so much things that need to be automated away and made more efficient just without automation and technology. But with what you're talking about is the investment side of things, right?
Correct.
I think one of the greatest protections that also prevents everyday people from participating in the wealth game is the idea of registered investors, right? Like the secure investors, right? So if only you meet a certain criteria, I believe in the United States, it's like if you make $300,000 or more, or if you have $3 million or more in assets, you're qualified as a professional investor, and you're allowed to participate in certain levels of investments, right? You can, you can first of all, participate in these larger funds, venture capital, all those kind of things. You can actually make more riskier investments, but that's where the majority of returns come from, right? Like if you see some of these funds, they make like 20% rate of returns, 30% rate of returns. Regular people don't see those kind of rates unless it's like a credit card, right?
Yeah, exactly. Where they're being charged and not earning. Yeah, yeah.
Exactly.
The numbers are a little lower than that in the U.S. It's $1 million of net assets, or 200,000 a year for the last 2 years to be
Gotcha.
a registered investor. But that number's been the same since 1952. So that's when the rule was put in place. And in 1952, that meant you had to have a lot of money. But somehow, in the wisdom of the regulators, they thought that putting that rule in place, it really was designed only to protect people from losses.
Hmm.
But somehow that also implied that you had some amount of knowledge of investing just because you had this money. And that certainly isn't true.
Yeah.
Um, the SEC is kicking around the idea of giving some kind of test that you can take and validate that you are knowledgeable. Up until last year, even being a registered investment advisor and holding 7 different federal licenses, I still wasn't qualified uh, as an accredited investor unless I had those financial assets. I had to still be making 200,000 a year. I still had to have $1 million in net worth, exclusive of your primary residence, in order to qualify as an accredited investor, even though I was the one teaching these people about how to invest. And I had taken all these tests and did all this stuff. Now that just changed. So as of 2020, that rule changed, and now people that are selling it can be considered accredited investors, but that doesn't help the average investor. Um,
Mm.
you know, I agree that people should have knowledge of what they invest in, but that's a personal responsibility, not a government responsibility. Um, and somehow the government thinks that they're responsible for that. I don't think they should be, but
Hmm.
that's neither here nor there. That's what the rules are, and that's not just the U.S. That's pretty much everywhere around the world. In the U.S., we call them accredited investors. In the U.K., we call them sophisticated investors. But it's all basically the same. Um, the UK has one advantage, that they will let you self-certify. So you can say, I'm not a sophisticated investor, but I'm also not going to invest more than 10% of my net worth. And then you can participate in some things that we can't participate in here in the US. Um, we don't want you to even have to do that. We want you to be able to participate no matter what. And so that's the challenge, is just trying to get that out there so that regular people can invest. Um, and that's the first hurdle. The second hurdle is that we're doing that investing is then all carbon zero energy positive residential developments. Um, so that's the second piece of the puzzle that we're putting in there.
Hmm. So, I mean, talking about this, like especially with democratizing investing, like this is one of the promises of crypto, right? It's DeFi, the
That's right.
decentralized financial system that's coming, right? With the centralized financial system that we currently operate in, you get a lot of bailouts. You get a lot of artificial movements in the marketplace, right? Where companies that are, should be going under are propped up and kept over. I mean, look at during COVID, right? Like trillions of dollars worth of
I think that's
capital.
most of our market right now.
Yeah, yeah, exactly. Trillions of dollars of capital have been entering into the stock market, to keep these stocks more than afloat. But what it does is it props up the investor class, right? People who can afford. 20% of the population who can, who actually owns stocks, who owns assets, are being propped up artificially, and everyone else is kind of left to their devices. So, with crypto, how does that, like, or with security tokens and tokenization, how do you see it as like a way to democratize investing and to allow more people to access wealth options?
No, I still see it. It doesn't. The big change because it's really the same as what we're doing right now. The difference being that we're removing the middleman. So we're removing the wirehouse. And that's why we've seen so much pushback. That's why we see Jamie Dimon saying, this is terrible. This is a tantamount to getting in bed with Satan. You shouldn't be doing this until the day that they announce that they're doing their own coin. And then it's the greatest thing since sliced bread.
Of course.
That's the way they always do it, right? We're removing the middleman. So the middleman, all these big wirehouses that have been making money hand over fist, and quite frankly, even through the pandemic, they've made money hand over fist because they've been given all this money to loan out that they're not loaning out, and they're keeping that money for the day rates and making tons of money off of this money that's supposed to be going to the average person and not. They're trying to figure out ways to make money, and they haven't figured out a good way to do that in the tokenized space yet, because it's peer-to-peer. So I sell directly to you. I don't need anybody in the middle. You don't need anybody in the middle. The trust is created by the code that's there, by the algorithm that verifies that I'm me and you're you, and we agree from an algorithmic basis, and we exchange assets. And it's easy and done, and it's quick. It's, you look at just something as simple as I want to send money to your bank account. Well, why does it take a day or 2 days to get there? It shouldn't. It's transmitted immediately. The reason it takes that long is because they're holding that money and making that day rate that they're getting paid by the Fed for holding this money, and they're making interest on this exchange while you're waiting to get it, and I don't have it anymore either. It's ridiculous what we're still doing in our financial markets.
So, like, when I think about crypto, right, I always look at the numbers. Like Dogecoin is up 14,000% year to date.
Thank you, Elon Musk.
Exactly, right. And I started back calculating. I'm like, oh man, if I only put like $500 in this last year or 2 years ago, 3 years ago, like how much would I have made, right? Like the crypto market is so full of FOMO, right? It's like I wish I did this, I wish I did that, and like people only see it during the upticks, right? What do you see the power of crypto and tokenization, especially with what you're doing? Where's the value at?
The real power to me in tokenization is in real world use cases. You talk about a Dogecoin or many of the other things that are out there. There's not real world use for any of those things. It's just the little guy trying to make a big money on little money and trying to figure out a way to do it, but there's not a real use case. So for us, we're trying to create a real world use case. So we're not changing the world or anything. We are just changing the model, not how it's done. So closed-end evergreen funds have been around forever. Most closed-end evergreens funds have been available only to private investors and to accredited investors. So they're the only ones that can make money from that. When we digitize it and we can go peer-to-peer, then we can let the little guy in. Now, the challenge for us is meeting all the regulatory requirements to be able to do that, and making sure we've jumped all the hurdles. And that's the part that I've spent 2 years working on, and we've got that pretty well figured out, because no one's creating new regulation. So it's how do we make this new technology fit into the old regulation? There are a few places around the world that are doing that. The U.S. isn't there yet. The U.K.'s trying a little bit, but the U.K. typically takes a wait and see approach, more than a let's get out and be a blaze a trail kind of people. They're waiting to see what everybody else does, which is typically the SEC, and the SEC is dragging their feet. So they've done a few things, though. They just came out with a law that kind of helps define who owns what. That's happening some. Germany just came out and said that large institutional investors can hold up to 20% of their assets in digital shares, which is huge. We see a lot of movement going in the right direction. We see a lot of institutional investors investing in Bitcoin over the course of the last 6 months to a year. I don't think Bitcoin is the answer. I think Bitcoin was just the front runner, but it's not a bad place to invest. I don't think you should put all your money there. It's certain any good investment, you're not going to put all your money in one basket, but it's certainly been a good one so far. I mean, for those that got on board early, to see it at a price of 55,000 a token now is pretty crazy compared to having bought it, 13 cents or a dollar.
Yeah, yeah.
I didn't get in that early, so I didn't get to ride that wave. But my crypto investments have more than quadrupled from what I put into what they're worth. So that's always good.
Hmm. Yeah, I mean, so this new system, this decentralized system, is coming to play, right? And you're talking about real world use cases in real estate. There's been so many experiments run on like how do we use this in real world, right? Whether
Yeah.
it's using crypto to buy and sell property, or creating tokenizing properties, so people can have like multiple people can own one property, right? There was a condo project that's done where instead of buying units in a condo, you buy units in the entire building, and whatever rent the entire building makes, whoever owns a crypto asset will make a fraction of. So if you own 10 units, other person owned 100 units, whatever the entire building makes, it's fractionally
Right.
given out. There's also been experiments in NFTs, right? Like NFT as deeds. So when you buy and sell properties, you can make, you can sell the property as an NFT, where it's like a digital token that represents a property.
Right.
What excites you at the real estate potential of and property potential of working with like real, like the hard assets and mixing that with crypto?
Yeah. Some of the challenges that we face right now is the legalities of who owns what, and until that's one of the things that they're trying to establish, and that the UK was just recently talking about, is trying to get that established, and Wyoming is working on trying to get that established. But until there there's ruling that says that if you own a token, then that is a contract, and you own it. While that seems pretty simple to those of us who understand how this works, it's not simple to the legal space apparently, and so there's still uh, a problem with, if you and I own shares of this apartment building. Well, we own tokens in it, but whoever actually owns it on paper still is the one that owns it on paper. And if they go and sell it, then you and I have to go after them personally. And there's some legal complications at this point to be able to validate that ownership. And until that's ironed out, actually buying a token in a real world asset like that is a bit challenging, because we don't have the legal legs to stand on to go after that if someone is a bad actor. Um, when Which is why we chose to digitize a fund of a fund as opposed to digitizing the actual asset. So when you digitize the fund, there is legal framework for that. Now I own a share of that fund. That share is defensible if there is a problem. They own that share, and there's no question about that. So we don't have to worry about the legal framework within the fund structure. Um, I think we'll overcome that legal framework eventually, and so that we won't have to have that concern. But right now, if you have to go to court and defend yourself and try to get your money back, it's not really legally defensible at this point, and so that's a problem for me. Um, I think there's some great opportunity there,
Mm.
but before I'm going to invest in it, the legal framework needs to be in place so that I can protect my asset, and that doesn't exist yet. So that's why we chose to go the fund route. We also chose to go the fund route, though, because obviously, as you've alluded to it a little bit, but we haven't talked directly about it, and that's the most retail investors are fairly limited in their knowledge of investing, right? If there is something called crowdfunding that people can do today, and you can go onto crowdfunding websites and invest in real estate projects. The problem from our perspective with those is that, one, as an investor, you have to be knowledgeable enough to do your own due diligence and figure out which one do I invest in and which one do I not invest in. And then it's a challenge to get a diversified portfolio because you're investing in one at a time. And then there's a problem that you actually are a lender and not a participant in the growth of that development. And that's what we're trying to get away from. The real money's made in the growth of the development, right? Buying a piece of land and building it out and selling it. That's where the money's made. And most crowdfunding doesn't offer that opportunity. So that's why we're doing that. So we get the funds so that people can defend and actually know that they own that share, but then they can have a diversified portfolio of investments and not just one offs. And then they don't have to have the responsibility of figuring out, well, this is a good one and this is not, and all that, because that's what we're professionals at doing. we figure all that out, put it in a portfolio like a mutual fund, and they buy that whole portfolio, and thereby have a diversified investment, even with whatever amount they're putting in. And we'll take as little as 10 pounds. In the U.S. says right now that's about $15, because exchange rate's pretty high right now. But still, less than $20, you can invest in a share of this company, and be able to start creating passive income.
So how does that work? So a bunch of people pool their capital together into this fund, or you buy a piece of this fund. This fund then goes out and funds real estate projects.
Correct.
Now, do people who invest have a say in what projects to support?
At this point, they don't have a say in what projects are going out there. We do intend to, once we have a bigger community, put some projects out there and say, we're looking at these two projects. Here's the numbers. Which one looks best to you, and give some people some voting rights in that regard. Right now, we're doing all of that. So until we build the fund large enough, we're still a startup, of course. So until we build the fund large enough, we're doing a lot of what we're doing in traditional format, where you're just going to the bank, and you have investors, and you're doing joint ventures and all that kind of stuff that you do in real estate to build the portfolio. Our portfolio right now is about 113 million pounds, or 150 million dollars worth is our current portfolio size, and that's growing. We're working on that every day, trying to add new projects to the pipeline. But eventually, we will have the community vote on different projects that are coming in, and we have a standard analysis format that we share with everyone, saying here's what it looks like. Here's what the purchase cost is. Here's what it's going to cost to build it out. All those different numbers. And try to start educating some people on how to do that, and how to analyze it and evaluate it and that kind of stuff. So that's part of what we're doing. There's one of the ways that we're going to attract new investors is by giving away free information. There's a number of people that we've probably all seen on TV that are trying to sell these real estate courses for thousands of dollars or thousands of pounds, and I don't know if you've ever invested in one. I did years ago. I invested in one, and they're worthless. They just take $1,000, $1,500, $2,000, and you get nothing other than somebody talking a lot. It doesn't really do much for you. We're going to give away information for free. Here's how we build. Here's what we're doing. Here's how to analyze the project. Here's the numbers that we look at and why we look at what we look at, and just educate people. Many people won't care about that. Some people will, and we want to bring everybody in and help people learn, and then how to create passive income. I mean, we don't talk enough about passive income, but all of us should be looking for ways to create passive income, meaning that you don't have to work an hour to earn that money. You put things in place to generate income for yourself that you don't have to spend hours to earn. The more passive income we can create, the better off we're all going to be. So that's ultimately what the end result is that we're generating passive income from all of these developments. We give back, CurveBlock gives back more of the profits than we keep. 5% off the top goes to charity, and then we split the remaining 95% 50-50 with the community. So we only keep 47.5%, and the rest goes to other people, the community predominantly. And that's kind of the model that we're working under. We want to be able to help everyone grow, and we feel we can do that with that model.
Yeah. So what I really find interesting about this is the barrier of entry is so low. Like $20 you can enter in, right? How do you how do we keep track of all these things, right? Like how much are you setting up like fund 1, fund 2, fund 3 meant for different projects, or is it like it all goes in one fund, and this quarter we're going to fund this, next quarter we're going to fund this? Like, is it different funds that people are funding at one particular times, or?
Yeah, no, it's one fund so that everybody participates. The way CurveBlock works is we do have an exchange. The only place that we'll list our token is on our own exchange, so we're building an exchange now.
Okay.
And that's largely because of what we've talked about earlier, the manipulation that goes on in the market. Yeah. That doesn't just go on in the financial markets that we know, that goes on in the crypto markets as well. And we want to avoid all that. We're not trying to participate in crypto. We're using tokenization as a technology to make things easier and more transparent and those kinds of things. So it'll be a peer-to-peer exchange that people can trade on. If they're busy trading and they want to trade in our token, that's great. If they take it off the exchange and put it into the wallet, that's when it's invested against the projects, and they'll be able to participate in the return. So it'll be the token holder's choice of how they do that and what they want to do.
Yeah.
But once they're invested, then because of the blockchain, then we can look at block heights and see who was invested when and who was in that platform at that particular time and who gets to share in the dividends from those projects. And until we reach, this first fund will grow to 50 million pounds. Once we reach 50 million pounds and more people want to come in, then we'll look at starting a second fund at that point. But for now, it'll just be the one fund. There will be a number of different special purpose vehicles, SPVs, or limited companies, if you will, that manage each individual project so that you silo all the projects so that one doesn't, if you have a problem on one, it doesn't affect the rest and those kinds of things, which you always do in real estate. But it is one fund and then various projects within that fund.
So let's talk about you're personally how you personally invested in this, right? Like, yeah, you talked about how you have a history of managing funds and investments. What excited you as a project? Like, how did you and Gary meet? Like, how did the team come together? How did this project come to be? Like, what led up to this point?
Yeah, so Gary was the brainchild of this. He was the one that came up with the general idea. Gary has spent his whole adult life in the construction business and in various aspects of construction. Our other co-founder, Matt, also has spent his adult life in the construction business. I grew up in a construction family, and so we built subdivisions when I was a kid in Texas, and then I've been a general contractor, but that wasn't my vocation. My vocation, of course, was in the investment world until I sold that firm. So when I started talking about and writing on LinkedIn about security tokens and the need for security tokens and following regulatory compliance, then Gary and I connected on LinkedIn through that because he was interested in what I was writing about. He told me about his project, and I said, well, from a financial perspective, this is how that would work and how we could build that. And he liked what I was talking about, and I liked what he was talking about, and we decided to start this company. So we started talking in March of 2018 and actually incorporated in August of 2018.
That's wild, because like, did you ever meet up face to face before forming this company?
No.
So like, this is like the future of startups, right? Like people like internationally coming together around a joint problem that they care about and forming companies and operating that. Now,
That's right.
Have you had any particular challenges being like an internationally run organization, running on different time zones? How has that been?
No, that's been fine. I worked with a project that was in Australia before that, in Sydney. That was challenging because that's 15 hours different from me. Yeah. So when they're awake, I'm asleep, and when I'm awake, they're asleep. That was a bit challenging. The UK is only 6 hours different from me in Central Texas. So for them, we started this at noon. That was 6 o'clock their time, 6 p.m. So it's not that big a deal for me to start my day at noon their time and work through the rest of the day and be able to get stuff done. I've been working remote since 01, so for 20 years. I decided in 01 that it didn't make any sense for me to have an office anymore. All of my agents, I had 37 agents, but they were dispersed across Texas. A number of them were in the town that I was in, but I expected them to be out in the field meeting with clients, not sitting in the office drinking coffee and talking. So one day I was sitting in the office and I had a receptionist there and I had a secretary there and me, and I'm thinking, why am I paying more than my mortgage for this office when nobody's here except for us? And so I decided to close my office and just meet with people in person, and I did that in 01. So working remote is something I've been doing for a long time. I started using Skype when Skype was terrible. It was awful, but it still was. It was technology, and it was fascinating that you could even have these video conversations and not be in the same place. Now that technology obviously is really good. Not that we don't have challenges with it. It's technology. We'll always have challenges, but it's improved so much. It's pretty easy to do. Now, of course, prior to COVID, I did go to the UK and have meetings there and meet people in person. Of course, that all had to stop March of last year.
Yeah.
So I plan on going again last summer. Well, that didn't happen. And when I'll be able to go again, who knows? it's still pretty up in the air, and from my perspective. Um, but technology works. It works well, and when you have a shared passion and a shared desire for outcomes, it's easy to connect, and technology makes it easy to do.
Yeah. Uh, that's really cool. That's really cool. You started in '01. Put you really ahead of the curve, and like you figured this out before. For everyone else is like the pandemic hit, and then they're scrambling to figure out how to work and handle that. And I love talking to people who've been working remotely previously before this because they're just running in stride. While everyone's confused, they're just taking advantage, right? Because they're like, oh, I already have my processes set. I know what to do. I know how to run. Everyone else is now online, so it's much easier for me, right? And it
Right?
gets going, right?
I got busier.
Mm.
I got busier in the pandemic because everybody else started getting on these meetings like I was already doing. So
Yeah.
now it was easy to meet with people.
Yeah. Yeah. Yeah.
The expectation of that in person was gone, and so I got busier. I had a lot more meetings than I was having prior to that happening. But that's
Yeah.
true. Yeah, people are talking about, oh, my kids are at home. It's crazy. We were homeschooling 4 kids when I decided to move my office to the house. So that's something I've already been through.
So, speaking on that, right? Now that you're, everything's running virtually and you're operating, what stage are you at? Are you guys launched yet? Are people can they invest?
We're at seed stage. I've spent a lot of time, as I mentioned, working on the regulatory piece. So I've worked with attorneys literally around the globe to get that piece figured out in the best way that I could, um, and we're moving forward with that. So uh, we've still been not marketing CurveBlock. We can't market because we don't have the regulatory compliance to do so. Um, that said, people that find us and know of us and need us, it's like any IPO. You get in early, you can get in,
Yeah.
even prior to the IPO if you know the founders. So there are people that have invested. We have taken some equity investment. We're still raising a little bit of money in equity, but that will stop before long because of our model. We don't feel like we're going to need to take equity investment for very long, and we're about to the point where we're going to cut that off, but we're not there yet. So we are still taking equity investments, and we do have token investors. So right now we have about 89, I guess, different investors. Maybe it might be more than that now. I haven't looked at the numbers lately. About 74 of them are token investors, and then we have a number of angel investors that have invested in the company, and then one VC there in Toronto.
Amazing. That's cool. So, you guys are raising capital for right now your operations and getting set up, and then soon you're launching their tokenized service where people can invest directly in these projects.
Exactly
Now,
right. Yeah.
yeah, so Gary was very passionate about these projects, right? More like I love talking to you now because I'm getting a full picture. You're talking about the investment side, how it's going to operate. But Gary, he's super into, hey, what are the properties you can do? Like, what kind of technology can the properties have? Like, how can we make them LEED certified? How can we make them green, more energy efficient? Right? Like, can we talk a little bit about the properties? What excites you about
Absolutely.
the investment potential? What are people going to be able to buy into?
Yeah. So as I'm sure you know, the building business hasn't changed in 200 years. We build houses the exact same way today that we were doing 200 years ago. Nothing has really changed. And um, while I think it's a different conversation to talk about this whole carbon issue. I personally, I think we should be talking more about the lungs of the earth and not so much about the carbon. The reason we have a carbon problem, from my perspective, is because the earth has a breathing problem, and not because of trees, but because of soil or lack thereof.
Hmm.
But that's a whole passion. It's a different passion of mine in the grass-fed livestock world and all that kind of stuff. A different deal that I work in. In this particular case, um, it still is an issue. So the governments around the world are trying to figure out ways to reduce their carbon emissions. Of course, the construction industry as a whole generates about 30% of the carbon emissions globally. It's a big amount of carbon that's done from buildings and construction and those kinds of things. It's fairly easy to make a home uh, carbon zero, net zero from a carbon perspective, and that's just simply remove the use of fossil fuels. Um, the UK especially, they don't have resources there within the country. They're shipping all their oil in, which is why their gas prices are astronomical, and they're using heating oil to heat their homes to a large degree, which is expensive. They're using gas and various things to heat homes, which is all expensive for them because it's all imported. So these homes, we're just removing all fossil fuel use. So we're using solar, of course, and batteries to store that solar, and gateways to disconnect and connect from the grid. The homes that we'll be building will generate more energy than they consume. So they'll be carbon positive and energy positive both. So not only will they not be emitting any carbons by not burning carbons, they're going to be contributing back to the grid instead of taking from the grid. That we're currently in talks with the Canadian government they reached out to us, interested in what we were doing for a lot of what they're trying to accomplish. As you're probably aware, Canada has committed to closing all 5 of their coal plants by like 2030 or something, but they don't really have a plan for how to replace all that. They want to close them, but they need to do something about it. So they're looking at what we're doing as a way to really ease that pain, if you will, because these homes will be contributing to the grid, so they'll be creating energy for the grid, not consuming energy, which is a great way to participate. So it's a lot of fun. We're using heat pumps and various things to make those homes efficient, and then we're trying to reduce another problem with construction. If you ever driven by a construction site, you see huge mounds of trash. There's just piles of it that are out there, and that's because the construction industry is not conservative with material use at all. Matter of fact, they're pretty irresponsible with material use, in my opinion. And I don't know about the rest of the world. I know here in Texas, when you're managing people, you hear people say a lot. There's a common saying by people in the construction industry that it's not my nails, not my money. Meaning that I'm not paying for it, so it doesn't really matter how many nails I use or how many boards I use or whether I just take a foot off of this 8-foot board and throw the rest of it away. None of that matters because it's not my money. That's a bad attitude, but it's a pretty common attitude within the construction space. So using modern methods of construction and instead of traditional building is a way that will reduce that waste. So instead of building a wall on site, you build a wall in a factory. Where you're using calculus and getting down to the nth degree of how you use that material and reducing the waste as much as possible to be efficient with those material usages. And then that also helps because then you're taking out and putting a house together like a big puzzle instead of putting up a bunch of walls and needing to nail it all in place. And so the model home that we currently have was built in 11 hours. Now, that wasn't the build time in the factory, but that was what it took to get it all erected and closed in and dried in, because it comes in with the sheetrock in place, electrical's in place, plumbing's in place, exterior cladding's in place, everything's there. You're just putting it all together with a crane, and your house is erected in 11 hours with the roof ready to go.
Prefabricated homes.
It's a little different than that. Modular construction is a little bit different than prefab. And that's something that's pretty interesting in the industry when you start really looking at it. So the U.S. is a little bit different, and Canada is different than the U.K. Because we had a big mobile home and RV industry here that didn't really exist in the U.K. So when we think of modular, we tend to think of mobile home, or we tend to think of a recreational vehicle. We don't really think of building. And for us, a lot of times it's a whole building. So you have job site buildings where you take it, the whole thing, and you just set it in place, and it's complete and closed. It's a big, almost like a container or a mobile home, if you will. These homes are a little bit different in that you're just building the walls and not necessarily the entire structure. In the UK, that's partly because they just don't have the road width to do that everywhere. I mean, they'll have roads that are, 6 meters wide or whatever, and we don't have that issue here in the U.S. and in Canada. Our roads are plenty big. We can haul stuff around and do whatever we need to do. So they will have some 3D components, like you'd put your whole kitchen together or you'd put a whole bathroom together, but that's a smaller unit that can still go on a fairly narrow truck and get out to the site. So you're controlling the building process, so everything is very exacting. Everything is, you've got a lot of quality control, which you don't have on a job site, of course. Now, as a general contractor, one of the challenges every time you leave the job site, when you come back, somebody did something wrong, because you're expecting them to read the blueprints and you're expecting them to read it the same way that you do, which they should, but that doesn't always happen. They see things and they see a 4 instead of a 6, or instead of an 8 or whatever, and they cut something wrong and do things differently. So as a general contractor, every time you leave, something gets done wrong. When you're doing it in a factory, you don't have that concern, because it's all exacting. It's all done the same. You're using as much as you can. You're using automation for cutting and various things. So you're really reducing that overall cost. So we can do these modular energy positive homes at a similar cost to a regular stick built home. So it's a little bit different than what we think of when we think of that. So the quality is much higher. We're using spray foam insulation. We're using really high end materials. But it goes to site with all the plumbing in place, and you're just connecting it on site, almost like a Lego.
Yeah, I've heard of this construction these modules, right? Modular kind of constructions, really cool. I mean, one of the most famous ones is like China building a skyscraper in like 14 days, right? Just like plugging in different models coming in from the plug and play suites almost. And if you look at it, like the United States really led the track on this, right? Like the Golden Gate Bridge, the Empire State Building, they were built within months, right? Like or weeks with the Golden Gate Bridge, like these massive construction projects, like 100 years ago. And then naturally, like complexities get put into construction to inflate costs, right? Because complexities means like more people get money. The subcontractors make more money, the contractors make more money, the builder makes more money. And now we've gone from a place where we can build these magnificent, like these huge projects in a matter of weeks and a matter of months. Now, like 100 years later, it costs like $1 million to build a house, and 3 years, right? Right, like it's insane. Like in my neighborhood right now, it's a phase division, right? So the subdivision being built. It's a suburb outside of Toronto. It's a new group of housing coming up. Like almost every 5-10 years, new groups is coming up in the area, and it's like, why did it take 3 years, 4 years to build these properties, right? Like, what are these complexities? Like, we know if we can engineer this properly, if we systemize it properly, you can get it up in a matter of weeks, right? If you really wanted to.
Right.
So I think these kind of materials are really cool, but I think the real opportunity here, especially being in Canada, what I think about is that one of our biggest problems is the north and the rest of Canada. We have like, there's the Eastern Canada and the Western Canada, and everything in between is kind of separated because we have the Canadian Shield, which is, pretty much bedrock, like the boreal forest built on top of bedrock, which is very hard to dig through, right? So it's very hard to lay down anything into the ground. But if we can make like these energy efficient modular homes, you can pop into areas. We can, you can like, it's going to be more of a need as like our cities are becoming more and more, people are getting priced out of cities and going more rural areas. This allows for more rural constructions, right? Where you don't necessarily need, to lay the gas pipings to come down, and you don't necessarily need all this stuff in. You can create these kind of like modular like communities that kind of run like almost like their own grids or semi off the grid, right? Do you have like, what's your interest there? Like, are you guys primed for a certain type of real estate projects, which is like more the mainstream? Are you trying to go for more like these like more fringe kind of places, or are you trying to like a mixed bag approach? Like, do you have like any kind of targets that you want to do?
Yeah, we have different projects right now. I mean, we are looking at it. Pretty much everything we're doing is more of a development, so multi-home.
Okay.
Doing a number of them, not one-offs for the most part. But we look at, it comes down to numbers. I mean, we're looking at what is the cost and what is the potential return, and so for us, we're looking from a profit perspective. We're not going to look at any project we can't make at least 25% on, and we have some that are 70-80% return. It just depends on the project. So we look at everything on a project by project basis. When we were contacted by the Canadian government, their interest was really in helping Indigenous peoples there in Canada, because they have a big problem. And the Canadian government apparently really supports them financially a lot, and a lot of times builds their homes and does different things and to try to support them. And they have a challenge with that. So being able to build energy positive homes and then offer the financial inclusion to these communities was really exciting to the Canadian government. Um, but that issue, for Texas has never been too concerned about energy. But I think that probably all changed with this last ice age that we had down here, and all these plants got shut down. And so
Hmm.
while you aren't necessarily concerned about the energy itself, the understanding that now we should really start considering the ability to be independent and to be energy independent is a pretty big conversation to be had. So if you
Absolutely.
can be energy independent and you can be a contributor instead of a consumer, why would you not do that? I mean, what would be your argument to not be a contributor instead of a consumer? Um,
I can
if we can all
definitely
do
see that.
that,
Yeah, I mean, Texas was so close to like the power grid going down almost completely. Right, and like it would have taken it would have taken years to get it back up fully. So, what's the movement there? Like, is Texas moving towards more of a off-grid kind of infrastructure? Are people more interested in that now?
I, quite frankly, I think most people probably saw it and it was over in a couple of weeks and they've already forgotten about it. But I think having the conversation, if when you have the conversation, people are more willing to listen and think about it now than they were prior to this happening. And
Yeah.
when you say you should be thinking about energy independence, they're like, maybe I should be thinking about that. Whereas, last year you'd have said that and they'd have been, I don't know what you're talking about. Why would I care about that? Now at least they understand and they've seen firsthand because most of us have to experience things to really understand them because we're stubborn. And so now people have seen it, and so you have that conversation, and they're like, okay, that makes sense. Explain it to me. How does that work? How can I do that? And so those are fun conversations to have.
Really cool. Awesome. Joey, this has been great. I love the fact that I talked to both you and Gary, and I saw different aspects of this. For the audience, unfortunately, we couldn't record Gary's segment. We had some technical difficulties, but I really like this project. I really like the ideas you have behind this. One, you're talking about DeFi. How do we allow more people to participate in investing and get especially real estate investing? 20 bucks being an entry fee being $20. That's amazing. And then the second side, energy efficient housing, modular homes, becoming more, bringing some efficiency into constructions. It's a very ambitious project you guys are working on. You're working on two, bringing you're colliding two major aspects of what people are really interested in, what in our economy, and bring it together into a wonderful project. So kudos to you guys, and really looking forward to seeing how this develops. Would love to have you or Gary or your other co-founder on in about 6 months and get some updates about what's going on and how people can participate.
I love to do it. It's fun. It's a fun project to work on because that's the way I see it, exactly like you described it. I mean, we're bringing two very important elements together into one. Um, from my perspective, it's going to take a lot of education for people to understand why should I invest in this. So people that are more investment savvy are going to get it probably faster than those that aren't. But that's what I spent my career doing in the investment world. Is my whole philosophy was giving people the information they need so that they can make educated decisions for themselves. Because most of us don't find financial information on our own. It takes a lot of time to figure all that stuff out, and we're busy just on our day-to-day grind, just making sure the bills get paid. So helping people see the bigger picture and understand how it can help them is part of the objective. But then doing it with something that can really impact the globe and reduce carbon emissions and feed back to grids. Energy is an ongoing problem. We learned from the Texas experience. From my perspective, I think trying to look at one particular energy source is problematic. Um, we saw in Texas that all of the wind, Texas produces 20% of their energy, 23% of their energy from green energy. So wind energy and solar, and 100% of that green energy was knocked out. It was out of commission because the solar panels were under ice and the wind turbines were frozen and couldn't turn. So it totally stopped production. So while on one hand the green is positive and that's a good thing, relying on only one type of energy production is problematic. So that's something that we should really consider is that diversity. And while we want to reduce carbon emissions, we need to be conscious of the long-term effects of all these decisions that we're making today. not just looking at today, but looking at generations to come and providing a better world for those that come after us.
Amazing. Perfect. I love this project so much. So, definitely, let's reconnect in about 6 months, and love to get some updates from
Love
you.
to do it. Yeah,
Joey, thank you
love
so
to do
much
it.
for coming on the show.
Ravi, it's a pleasure.
Perfect. So stick around. We'll do a quick debrief, and for everyone who tuned in, thank you. See ya.